If you woke up recently, checked your bank account and saw two different federal deposits sitting there, one labeled SSA Treas 310 and another labeled IRS Treas 310, you are not alone in wondering what just happened. I have heard from retirees in Florida, Ohio, Arizona, Texas, and even right here from viewers in small towns who tell me the same thing. Did I just get a bonus? Is this a mistake? Is one of these going to be taken back? That uncertainty can create stress very quickly, especially if you are living on a fixed income and every dollar matters. So today we are going to clear this up calmly and clearly. Two payments, two federal agencies, one bank account, very different purposes. And if you depend on Social Security, SSI, SSDI, or a combination of retirement income sources, understanding this difference can protect your budget and your peace of mind. If you appreciate straightforward updates like this without panic, rumors, or political noise, consider subscribing. It simply helps you stay steady and informed in a time when headlines move fast and details get lost. Now let us talk about what is really happening. The Social Security Administration and the Internal Revenue Service are both federal agencies, but they do completely different jobs. The Social Security Administration, or SSA, manages retirement benefits, disability benefits, SSI, and survivor benefits. The Internal Revenue Service, the IRS, manages taxes, refunds, credits, adjustments, and stimulus payments when Congress approves them. Both agencies send payments through the U.S. Treasury system. That is why the word Treas appears in the deposit description. But just because they use the same Treasury system does not mean they are connected in the way many people assume. This is where many people get confused. They see two deposits close together and think, my Social Security just increased? Or I am getting two monthly checks now. In most cases, that is not what is happening. Here is what this means for you. If you receive a deposit labeled SSA Treas 310, that is your Social Security benefit. It could be retirement, SSDI, or SSI. If you receive a deposit labeled IRS Treas 310, that is tax-related. It could be a refund, a credit, a correction, or sometimes a late adjustment from a prior tax year. Two agencies, two rule books, two payment systems, one federal government. Now let us dig deeper into Social Security first, because that is the foundation for most retirees. Your Social Security benefit is calculated based on your highest 35 years of earnings. If you worked fewer than 35 years, zeros are counted in those missing years, which lowers your average. In 2024, the average retired worker benefit is around $1,900 per month. Some receive closer to $1,300. Others who delayed until age 70 may receive over $3,500. Your payment schedule depends on when you started benefits and your birth date. If you began receiving benefits before May 1997, you are typically paid on the 3rd of the month. If you receive SSI, payments generally arrive on the 1st of each month. If you started after May 1997, your birthday determines your payment date. Birthdays between the 1st and 10th are paid on the 2nd Wednesday, between the 11th and 20th the 3rd Wednesday, between the 21st and 31st the 4th Wednesday. That schedule is predictable. It does not randomly change. It does not double unless there is a calendar adjustment because of a weekend or holiday. For example, if the 1st falls on a Sunday, SSI might be deposited on the previous Friday. That can create what looks like two payments in one calendar month. But it is not extra money. It is a timing shift. Understanding that prevents overspending. Now here is something important. Sometimes your Social Security payment can increase slightly outside of the annual January COLA increase. This surprises people. Maybe you continued working after claiming benefits. If your new earnings replaced one of your lower earning years in that 35-year calculation, your benefit could be recomputed. That might increase your monthly amount by $15 or $28 or maybe $47. It is usually modest, but it is permanent. That type of adjustment comes from SSA, not the IRS, and it would show up as a slightly larger SSA Treas 310 deposit. Now let us shift to the other deposit that causes so much confusion, the one labeled IRS Treas 310. This is where many retirees start asking questions. Did Congress approve something new? Is this a stimulus? Did my Social Security change? In most cases, the answer is much simpler. An IRS deposit usually means one of three things: a tax refund, a tax credit, or a correction from a prior tax year. Let me explain why this matters. The IRS operates under the tax code. Social Security operates under the Social Security Act. They are separate systems with separate rules, separate funding sources, and separate eligibility requirements. If you filed a federal tax return and had too much tax withheld, maybe from a small pension, part-time job, or even Social Security if you opted for voluntary withholding, you may receive a refund. That refund is simply your money being returned to you. It is not new income. It is not a benefit increase. It does not change your monthly Social Security payment. It is a correction. Now let us talk about tax credits, because this is where things sometimes feel more complicated. During the pandemic years, many seniors received stimulus payments that were technically structured as tax credits. Those payments were processed by the IRS, not Social Security. Even retirees who did not normally file tax returns were eligible in many cases because the IRS used Social Security records to issue payments automatically. But if someone did not receive a full stimulus amount, for example, the $1,400 third economic impact payment, they could later claim it through something called the Recovery Rebate Credit when filing a tax return. If approved, that payment would arrive as an IRS deposit. Not from SSA, not labeled as Social Security, not tied to your retirement benefit formula. This is where many people get confused. They see money arrive and assume it must be connected to their monthly benefit. It is not. Here is what this means for you. If you receive an IRS refund in March for $1,250 and your regular Social Security payment is $1,120, that $1,250 is temporary. Your base monthly income is still $1,120. Treating that refund as recurring income can create trouble later in the year. Now let us talk about something important that does not get discussed often enough: offsets. The IRS has authority to offset tax refunds if you owe certain debts. That can include back taxes, certain federal debts, or even some state obligations. If you expected a $1,000 refund and only received $400, it may be because $600 was applied to an outstanding balance. Social Security retirement benefits, however, follow different garnishment rules. Standard tax debt collection generally targets refunds first. That distinction matters. If you understand which agency sent the money, you understand which rules apply. Now let us talk about timing. Social Security payments are monthly and predictable. IRS refunds are seasonal. Most refunds are processed between February and May. Some late filers receive refunds in the summer or fall, but they are not monthly, they are not guaranteed every year, and they depend entirely on your tax filing situation. If you did not file, you will not receive a refund. If you had no withholding and no refundable credits, there may be no payment. Now here is another scenario that creates confusion. Sometimes retirees receive a small IRS deposit months after tax season, maybe $87, maybe $214. That often happens because of an adjustment, a recalculated credit, corrected income figure, or processing update. It can feel random, but it is administrative, not a benefit increase. Now I want to address the rumor cycle. From time to time, social media posts start circulating claims like new $2,000 payment for seniors approved, double Social Security checks this month, IRS sending bonus to retirees. Most of the time, these are misunderstandings or proposals that never became law. If Congress approves new stimulus legislation, It typically goes through the IRS system again because it is structured as a tax credit. Social Security would not suddenly issue extra checks unless the law specifically directed them to change benefit calculations. Two agencies, two processes. Understanding that helps you filter out misinformation. Now, let us bring this back to practical planning. If you are living on $2,300 per month total income, maybe $1,350 from Social Security and $350 from a small pension, your budget should be built around that stable $2,300. If an IRS refund of $1,400 arrives, that is helpful, but it should be used strategically. Catch up on property taxes, repair a water heater, pay down high-interest credit card debt, or build a small emergency fund. Even having $800 to $1,000 in reserve can prevent financial stress when an unexpected expense appears. This is where many people get tripped up. They see two deposits close together, an SSA payment and an IRS refund, and mentally combine them. The following month feels short. Nothing was taken away. It was just temporary income. Let me explain why this matters emotionally as well as financially. When you are on a fixed income, predictability equals security. Unexpected deposits feel like relief. Unexpected shortages feel like danger. But clarity restores balance. Your Social Security is steady. Your tax refunds are situational. And when you separate those mentally and practically, your confidence increases. Now, before we move forward, I want to transition into something even more important: how these two agencies interact when it comes to taxes on Social Security, withholding choices, and why some retirees suddenly owe money at tax time. Because this is where many people truly get surprised. This is where the Social Security Administration and the IRS do not just send separate payments, their rules actually intersect. And if you do not understand how that overlap works, you can get caught off guard at tax time. Let us start with something simple but important. Social Security benefits can be taxable, not for everyone, but for many retirees, yes. This is where many people get confused. They worked for decades. They paid into Social Security. They assume the benefit is completely tax-free. Sometimes it is, sometimes it is not. Here is how it works. The IRS uses something called combined income to determine whether your Social Security is taxable. Combined income includes your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits. If that total exceeds certain thresholds, part of your Social Security becomes taxable. For single filers, if your combined income is over $25,000, up to 50% of your benefits may be taxable. If it exceeds $34,000, up to 85% of your benefits may be taxable. For married couples filing jointly, the thresholds are $32,000 and $44,000. Notice something important here. It does not say 85% tax rate. It says up to 85% of your benefit becomes taxable income. That is a big difference. You are not paying 85% in tax. You are paying your normal tax rate on up to 85% of the benefit amount. Let me give you an example. Suppose you receive $24,000 per year in Social Security. If your other income pushes you into the higher threshold, up to 85% of that $24,000, which is $20,400, could be included as taxable income. But your actual tax depends on your bracket. Now here is where the two agencies intersect. The Social Security Administration does not automatically withhold federal income tax unless you ask them to. You can request withholding of 7%, 10%, 12%, or 22% of your monthly benefit. If you do not request withholding and your benefits end up taxable, you could owe money when you file your tax return. This is where many retirees get surprised. They receive steady monthly payments all year, no taxes withheld. Then April comes and the IRS says they owe $1,900. It feels like something went wrong, but it is usually just a withholding choice that was not adjusted. Here is what this means for you. If you have additional income, maybe from a pension, part-time job, required minimum distributions from an IRA or rental property, your Social Security may become partially taxable. If that is your situation, you may want to consider voluntary withholding to avoid a year-end surprise. This is a planning issue, not a crisis, but it requires awareness. Now let us talk about required minimum distributions, or RMDs. Once you reach age 73 under current rules, you must begin taking required withdrawals from traditional retirement accounts. Those withdrawals count as taxable income, and they can push your combined income high enough to make more of your Social Security taxable. This is a chain reaction. One agency calculates your benefit, the other calculates your taxes. They do not coordinate your withholding automatically. You have to manage that bridge. Now let us address another situation that causes confusion. Some retirees choose to have federal taxes withheld from their Social Security. When they do, their monthly SSA Treas 310 deposit appears slightly smaller than their full benefit amount. That withheld portion is sent to the IRS. So technically, part of your Social Security payment is going directly to the IRS each month if you selected withholding. Then, at tax time, if too much was withheld, you might receive an IRS refund. That is when people see both agencies show up in their account history in the same year. And it can look complicated, but it is just bookkeeping. Now I want to talk about penalties briefly. If you owe too much at tax time and have not paid enough throughout the year through withholding or estimated payments, the IRS can assess an underpayment penalty. Most retirees do not face this if their income is modest. But if you have larger RMDs or investment income, it becomes more relevant. This is why planning matters, not panic. Planning. Now let us address something that has become more common recently. Scam calls that reference both agencies together. For example, someone may call and say, "There is an issue between your IRS record and your Social Security benefit. You must verify your account immediately." That sounds official. It sounds complicated. It sounds urgent. It is almost always a scam. The IRS does not coordinate tax collection by threatening you over the phone. The Social Security Administration does not suspend benefits without written notice. Neither agency demands payment through gift cards, cryptocurrency, or wire transfers. Remember this clearly. If someone pressures you to act immediately using fear, hang up. Legitimate agencies send letters. They allow time to respond. They do not create panic. Now, before we move forward, let me simplify the core idea of this section. Social Security determines how much you receive. The IRS determines how much of that may be taxable. You can choose whether to withhold taxes monthly or settle up at tax time. Understanding that overlap prevents surprises. Now we are going to move into the final section, and this is where everything ties together: budgeting strategy, state-level payments, stimulus proposals that may or may not happen, and how to build stability when deposits do not always look the same from month to month. Because at the end of the day, clarity is good, but confidence is better. Now let us bring everything together in a way that feels practical and steady. You may see 2 federal deposits in your account, one from Social Security, one from the IRS. They are not duplicates. They are not mistakes. They are not secret bonuses. They are 2 different systems doing 2 different jobs. Here is what this means for you. Your Social Security benefit is your foundation. It is calculated from your lifetime earnings. It follows a predictable monthly schedule. It may increase annually with COLA. It may adjust slightly if your earnings record changes. But it is designed to be steady. An IRS payment is different. It usually means a refund, a credit, or a tax correction. It is temporary. It depends on your filing situation, and it does not permanently change your Social Security benefit. This is where financial stability begins, understanding which income is recurring and which is occasional. If your steady monthly income is $2,100, that is the number your core budget should be built around. housing, utilities, food, insurance, medication. Those expenses should align with your reliable income. If an IRS refund of $2,300 arrives in March, that is helpful, but it should be used intentionally, not absorbed into monthly spending as if it will repeat in April. This is how small financial stress turns into larger stress. Now let us briefly touch on state-level programs. Some states offer property tax rebates, senior circuit breaker credits, or energy assistance programs. Those payments may come as checks or direct deposits separate from federal payments. Again, different source, different schedule, different purpose. If you are watching from Pennsylvania, New Jersey, Michigan, Arizona, Texas, or anywhere else, your state may have programs that operate independently from both SSA and the IRS. Understanding the source protects you from confusion. It also protects you from scams. Before we close, let me summarize the most important takeaway in simple terms. Social Security sends your earned monthly benefit. The IRS handles taxes, refunds, and stimulus-style credits. They are separate agencies, separate rules, separate payment systems. When you understand that, two deposits no longer create anxiety, they create clarity. Your financial security in retirement does not come from surprises. It comes from predictability, from knowing your numbers, from treating temporary money as temporary, and from recognizing that legitimate government payments do not require urgent phone calls, fees, or threats. If you are comfortable sharing, tell me in the comments which city and state you are watching from. Let me know if you have ever been confused by seeing both IRS and SSA deposits in the same year. Your experience might help someone else feel less alone. We are navigating this together, calmly, clearly, and with facts. Two payments do not mean trouble. Two agencies do not mean something went wrong. It simply means different parts of the system are working exactly as designed. And when you understand how they work, you stay in control.
Yeah, grind mode on, can't kill my drive. Turn the pressure up, I come alive. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. Wake up with a vision, I'm locked on the target. Turn pain into fuel, I'm a flame, I spark it. No shortcuts here, I embrace every test. Pressure on my shoulders, still I handle it best. I was made for the climb, every loss, every scar. Built me in the steel, now I shine like a star. If the road gets rough, I just double my speed. Ambition on 10, I was born to lead. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. They said limits exist, but I shattered the frame. Every wall in my path is just fuel for the frame. Discipline heavy, but my spirit is free. I don't chase success, success chases me. I'm the storm and the calm, I'm the rise, I'm the proof. Every bar that I drop is the grind in the booth. Blood, sweat, tears, that's the code I trust. I don't wait for the crown, I earn it, I'm rust.